Hello everyone. Today I'm going to talk about how the capital market mechanisms work in Indonesia. Basically, we'll learn how companies and investors interact in this system, from issuing shares to trading them in the market. Let's start with the basic idea. The capital market is a place where companies can raise funds and investors can invest their money. In Indonesia, this market is mainly managed by OJK, or Otoritas Jasa Keuangan, which supervise everything to make sure it's fair and transparent. Then there's IDX, or Indonesia Stock Exchange, which acts as the main platform where all the trading happens. Now, let's talk about the mechanisms, or simply how it works. There are two main markets. The first is primary market and the second is secondary market. In the primary market, a company that needs funds will issue a share for the first time through an initial public offering, or IPO. This is when a private company becomes public, meaning their shares are sold to the public for the first time. Investors can buy their share directly from the company, and the money goes straight to the company to help them grow their business. After that, the share move to the secondary market. This is where investors can buy and sell shares among themselves through brokers or online trading platform. The company doesn't get money from this trade anymore. Instead, the money moves between investors. So, for example, if I buy a share from you, I pay you, not the company. The stock price in this market keeps changing depending on demand and supply, or how many people want to buy or sell. Behind all these transactions, there are also supporting institutions that make everything run smoothly. For the first, security companies or broker-dealers. They help investors buy and sell shares. The second is custodian bank. They keep investor security safe. The third is clearing and guarantee institution, or KPIE. They make sure all transactions are valid and secure. The last is central security depository. They handle the settlement process, meaning they make sure ownership of share is correctly transferred. All of these institutions work together so that every transaction happens quickly, safely, and transparent. To make it simple, here's the process in short. The first is a company lists its share through an IPO, or primary market. The second is investor buy those shares. The third is after the IPO, share can be traded freely among investors in the secondary market. The fourth is every transaction goes through brokers and is supervised by OJK and IDX. The fifth is the supporting institution help with clearing, settlement, and custody. In short, the Indonesian capital market works like a big organized system that connects companies who need funds with investors who want to grow their money. When all the parts, from OJK to brokers, work properly, it builds trust and support economic growth. That's how the capital market mechanisms in Indonesia work, from the first offering to daily trading. So that's all for today's session. I hope what I've shared can give you new insight and help you see things from a different perspective. Thank you for listening. Bye bye.